Well, it doesn't get bigger than this when you have the folk hero of Indian stock markets, Rakesh Jhunjhunwala, to talk about markets, life, and some of his personal aspects as well. He's India's most admired and loved investor, and over the years I've interacted with him. Not only I've learned nuances of how to understand markets, I'm been humbled by his simplicity and his approach towards life. What a delight to have you back on ET now, Mr. Jhunjhunwala.
Thank you for calling me, and I hope all the adjectives you use are true. I hope I deserve them and I live up to them.
You know, I'm going to start with something which I picked up on my WhatsApp a couple of days ago, and it says there's a strong market rumor. I have that WhatsApp message on my phone. There's a strong market rumor that Big Bull, which is you, has informed his close circle of friends and his associates that markets have topped out, and now we may see a significant correction going forward. Have you told your friends like this?
Well, Nikunj, I think such rumors are most deplorable. I can always be right and wrong. I don't know who's spreading them and for what reason. But I think we are in the midst of a bull market, and I think we are in the very early stages of it. Because bull markets cannot end. You know, what are bull markets? Bull markets have valuation froth. And bull markets have commitment froth. Right? Now, just by valuation froth, bull markets don't end. Harshad Mehta beautifully said that there is a difference between commodities and stocks. In commodities, when prices go up, demand goes down. In stocks, when prices go up, demand goes up. Right? So, bull markets don't care for valuation froths. And then there is a commitment froth. Right? Unless the two combine, a bull market top is never made, along with bad news. So, you must have a commitment froth, which I don't think we have at all. Most people have not participated. They are questioning the bull market, right? And there is some amount of valuation froth, I would say, but very minimal. And that has to be combined with bad news. Having said that, I think we are just in the initial stages of what I think is going to be a bull market, which is going to put 2003, which will make us forget 2003 in my opinion. Also, having said that, markets have gone up from 6,800 to 8,800, 8,900 in the last 5 months. Markets could correct anytime, right? But it's my opinion that markets, even if they correct, are going to correct more time-wise rather than price-wise. I find it, the purpose of this interview also is, I don't want investors to be misguided. I don't think we are nowhere near a top on all indicators. If you see earnings growth, returns in the last 3 years, P ratios are high because their market is anticipating earnings growth, right? Industrial capacity utilization, interest rates, right? Then any kind of commitment. So I don't think, I hate that, people should misguide investors. I don't think we are anywhere near a top. We could have a correction anytime. We've had a 30% rise in 5 months. But that doesn't mean that this bull market is going to end. And I'm not an advisor to anybody except my wife, right? So I don't I discuss things with people. So I want to say distinctly that we are in a bull market. It's in the midst of just the starting. I think we are where we were in 2003, right? So don't get misled by such rumors.
So I'll take the clock back to 2004. We had a conversation on a different forum. I think the Sensex was 6,000 or 7,000, and you said in next 3 years Sensex could be 18, 19,000. I raised my eyebrows that time. That time on paper it looked unbelievable. So are you making a case that in next 3 to 4 years the index could actually double?
Well, I can predict the direction, not the depth. Even if I have some prediction, I wouldn't like to make it so early, right? But I think the direction is surely upwards.
Let me draw your attention to what's going on in the world right now. Growth is a concern. There are zero interest rates. There is an outcome of US presidential election which is still unknown. Economic growth is not real, at least at global level. So don't you think that at the global level there is a lot of complacency?
I don't think there's complacency because globally, I think history is going to change. All these smart people, George Soros, Druckenmiller, everybody is bearish. But the fact remains, Warren Buffett said that interest rates act like a gravity on valuations, right? Now, we have had valuations in America or in England or in Japan based on interest rates in America of 4 to 5%. Now interest rates in America are 0.25, 0.5%. Now unless or until interest rates go up, or there is some geopolitical problem or a crisis of confidence, how will the bull market break there? Right? You are having 1% yield in the bank. You have negative interest rates in Europe and Japan. What is a person? Don't you want to buy a stock with 5% yield? So I don't think, first of all, we have to recalibrate P's according to me, because these interest rates are far more permanent. Even if they go up, they're not going to those 5% levels, right? So I think we got to have some fresh thinking, right, before the markets abroad are going to correct in any significant way, I think. So whatever be people's opinion, globally growth may be slow, but in the interest rates being what they are, I don't think markets are going to correct there easily unless we have a gain in interest rates.
But why are we staring at a very disjointed world? Bond markets are pricing in almost a recession. Gold prices have gone up 20% this year. US equities are also at a record high. Is this all because of liquidity that the world has become fractured?
No, but is that it may be because of liquidity, but you got to ask yourself, is this liquidity temporary or permanent? It is temporary if interest rates are going to dramatically go up. If US interest rates go up from 0.5 to 0.75 or 1%, is the liquidity going to go away? I don't see interest rates going up below 1.5%, 2% in America. So you have to recalibrate the P's with the new interest rates.
Now, the conventional argument is that we are trading above the historical PE band, at least for benchmark indices. Do you think it's time to revisit that conventional
But
thinking?
sometimes history, yeah, I think so. Sometimes history does not recur. I don't say that markets won't correct, but the new reality is that we are at low interest rates. Those interest rates are going to be low for a considerable period of time, right? And therefore the P's have to, the historical P's may not be what the markets are going to determine. Because what are the alternatives? Interest rate deposits is 1%, in Europe it's negative.
So how should Mr. Jhunjhunwala investor invest in this kind of an environment? Because valuations aren't exactly attractive. There is no other asset class which will give you superior return than equities. It looks like a bull market, but there is no participation.
Well, that's how bull markets start. They end with humongous participation, but they start with very low participation. Markets go up, people question. See, I think when markets go up and there is no manipulation in markets, and people question the market going up and it keeps going up, that's a true bull market. Right?
The ultimate bedrock for any
Because you know what happens? Participation, people will say, oh, today market is very high, this, that, 5% lower, they'll be buying.
The bedrock of any bull market is ultimately earnings, and markets have gone wrong in their earning estimates. But do you think now we could be in for an earning surprise rather than an earning disappointment?
I think so, because earnings, first of all, in India, the effect of low interest rates, and I think further low interest rates has to be priced in, right? Second thing is, market is anticipating a growth in earnings. Market has been wrong in the last 2 years, right? But that's not going to continue. Earnings are going to grow because you'll have better demand. See, you look at the place, look at what has happened to Asian Paints. I have no interest in Asian Paints. Wherever there is a resurgence of demand, you look at the kind of profit growth. And I think in India there is going to be a resurgence of demand with time in every sector. And we are working towards it, whether in infrastructure, and each sector has an effect on each other. You look at the tile sector, you look at, wherever there is good demand growth, the company's stocks have just shot up. And this is going to spread in all sectors in time to come. So what we think the P's are high, but what market is anticipating is it's pricing stocks with the expectation that there will be resurgence of demand, which will lead to resurgence of earnings. And let's not forget one thing, that lot of companies have become very, very, very efficient, compelled to by circumstances. Capacity utilization is 69% today. I think in the industrial sector in 2009, 2008 it was 85%. So when this capacity utilization goes up, the growth in earnings will be disproportionate to the growth in sales.
Right.
There, the markets may not go up so much when the actual earnings come around, because market is anticipating the growth in earnings.
So if I look at the complexion of Nifty numbers, 40-45% of your Nifty 50 numbers are still global in nature, whether it is IT or pharma. That's the problem area. So the aggregate earnings may not go up because of global problems.
But that's a fact, no? That in any bull market, the large caps first underperform. And I can't believe that with time, Indian pharma and Indian IT will not perform. Every time people have questioned whether Indian pharma, Indian IT will grow. I mean, every time it has grown. And if the application of software is going to go through the roof, right? Then how will Indian companies see? There has to be a period of consolidation. I think that's what's happening in the IT industry. Similarly, in pharma, I think India is going to be a world power in pharma. We have the lowest costs, we have good technology, Indian companies are gaining size. And I want to give you an example, about Hindustan Lever. In 2009, in 2002 or 2001, post 9/11, when the market made a low, Hindustan Lever was 320. When the index was 6,000 in 2004, Hindustan Lever was 150. Right? And that's, therefore, it is, a lot of people ask about Infosys, that could be correct. In the initial stages of a bull market, the large caps are going to underperform. And I don't believe that IT and pharma are not going to be growth areas for India. It could be for 6 months, 9 months, because the application of information technology is just going through the roof. I mean, today, people are bearish and Citibank is giving a $1 billion single contract to digitalize the bank. And I think the competency of Indian pharma companies is just going up by the day.
So whatever hum and drum which we hear in the IT industry that Indian IT companies have lost their mojo, they're losing out to the new digital world, do you think this is a period of adjustment?
I think so. It's a period of consolidation and adjustment. They are still growing at 10 to 15%. And they are now acquiring international size. I mean, I think if I'm not wrong, TCS profits will be $4 billion. These kind of companies are not going to go anywhere in a hurry.
When I started my career, the definition of top 4 IT was TCS, Infosys, Wipro and HCL Tech. If I look at the definition of top 4 in IT, the definition is still same. The 1 and 2 keeps on changing.
Yeah.
So do you think one should actually only stick with large cap IT names rather than...
Well, I don't want to advise investors what they should buy or they should not buy. But I surely feel that the correction in the software industry, stocks, is something which is going to end and ultimately the stocks are going to perform. You make your choice.
Now, pharma has some real concerns. US FDA could be more like a regulatory hurdle. I'm sure they will be able to overcome some of those hurdles. Some companies have managed to do that. But the other concern is that there is a serious erosion in pricing.
Well, the first one I can tell you that I think this FDA problem for pharma companies was more cultural. Ki the attitude was chalta hai, kuch bhi karo, you can use any methods. But now Indians are fast learners. They realize chalta hai pharma mein, chalne wala nahi hai. Right? And I think all companies are taking steps to ensure that they follow the FDA rules to the last line, the comma and the full stop. And I think we are not going to face this kind of regulatory hurdles in the pharma industry in future. Maybe, they will be there, but it will be very few because that culture has changed. As for regard, I think people say there is erosion in pricing, but that's also going to kill competition ultimately. So there could be a period when, for a year, when there will be erosion. Erosion was always there, but I think that will die down with time. And these companies have made great performance. I have held, I'm not recommending Lupin, I'm not saying, but I'm only telling you facts that I've held Lupin for 14 years. There were 2-3 year periods when Lupin gave me no return. And the market performed and I still held on. And what a return I got. It's 125 to 15,000. Right? So there are times when, stocks don't perform. Because Lupin has gone from 600 to 2,000, it's going to correct. I'm not saying you buy Lupin, I'm not recommending Lupin, I'm giving you a general example.
But you are convinced with the best practices Lupin is following?
Well, I don't want to comment on any individual company.
But like in IT, we've seen that how the definition of large 4 or the big 3 has not changed. Within pharma also, do you think the definition of big 3 will not change?
I think so. These companies are now too distinct from their competitors. to really, for some newcomer to come and upsurge them. Because see, when these companies get large, they've got cash flows. Cash flows give you the ability to invest, and they don't get large without quality of management and opportunity. Maybe the opportunity when was such that may not be there for new companies. So I think the 1, 2, 3, 4, 5 of pharma companies, although they 1, 2, 3, 4, 5 order may change, but the 5 companies are largely going to remain the same.
I heard you on the Aurobindo con call, and you asked some pointed questions. It's in public domain right now. But are you not worried about that? Here's a pharma company which is looking at diluting. Normally, pharma companies don't dilute. They don't have too much of debt.
Well, I'm telling you, Nikunj, I don't want to comment on individual companies. I have a large investment in Aurobindo. Therefore, it's not proper for me to comment.
But you remain bullish. Your core investment thesis on Aurobindo is intact.
Well, I still have the holding.
That just shows your confidence. Okay, let me take the clock back and talk about a conversation we had in December 2015. And you said that avoid banks, with the exception of Kotak Mahindra Bank and HDFC Bank, all banks will have a problem. And banks have seen 2 quarters of very strong, painful write down. Have they opened their clothes, or do you think more is coming?
Not fully. I think Mr. Rajan was ensuring that they open their clothes and open it fast. I see, price-wise, these banks may have bottomed. But I don't think that they have recognized all the required NPAs, right? So it's very difficult to predict. They might have bottomed, I don't know. But surely on the NPA front, there is still a lot of innings to be played.
Even a stock like SBI?
Let me not comment on individual
SBI,
stock.
you don't have ownership.
No, but I may not have ownership. Why should I comment? What I feel is, in general, the public sector banks, NPAs recognition is still a long, long way to go.
We've seen a powerful comeback in metals.
But they might have made price bottoms.
Okay. So, price bottom is separate and
I don't know whether they made or
not.
not, they might have.
Okay. But you've not invested in PSU banks, and I'm sure that thesis will not change.
Well, no thesis is permanent. I can, there was a Pakistani ambassador to the UN. He used to put, you may not agree with me because it may be too late. I may have changed my opinion. So I don't know what I'll do tomorrow.
As of today,
I don't have any
status quo. Okay. We've seen a powerful comeback in metals this year. A stock like Hindalco is up something like 70-80% from the recent low. Tata Steel also has seen a reasonable rate of return. Is that hot air just a trading bounce?
No, what I have no commitment there. My personal feeling is that there was too much. First of all, the prices of the metals had gone to unsustainably low levels, right? They bounced back. Then there was a lot of fear in those stocks. So I think in the midst of huge falls, I mean, look at Hindalco, look at Vedanta, it went from 350 to 80 rupees. There was bound to be a correction, but correction upward. But I am not too bullish on metal stocks at the moment.
So your theory or your thesis that the multi-year bear market in commodities has started, is that intact, or global demand can surprise us?
Well, I think it's I am very, my opinion, especially in oil. I think 60, is for oil like a dharam, right? Because, and you must understand one thing, onshore oil costs $3. And the fracking capacity is 10%, 15% of the whole capacity in America. The whole world has still not even started, right? And in a lot of other countries, there are not so many environmental concerns as there are in America. Third thing is, with lower prices, the OPEC countries are compelled to produce more because of the cost. So I think personally that oil prices 60 is a line which is not going to be crossed. It's a prediction. I reserve the right to be wrong.
Of course.
It's my opinion. To be crossed is very, very difficult. Even in other metal areas, I am not very bullish on prices. I think metal prices in general may have topped out.
Last time you told me that Indian investors or Indian household savers, they should look at buying into gold. Would you still endorse that?
No, I never. I said I don't buy gold.
You will not buy, but
I am bullish on gold.
Okay.
Because when everywhere in the world, there are two factors. When everywhere in the world people are insisting, economies or central banks are interested in depreciating their currency, and interest rates being what they are, right? Some people are going to look for physical assets. And there is a very limited supply of gold in relation to the availability of liquidity. And even technically, I think gold has made some kind of a bottom.
Exactly a month ago, the headline was that Brexit has caused the biggest single market cap erosion ever. Today we are not talking about Brexit. Can we safely put Brexit behind the back burner? Do you think when we will look back, it will be more like a footnote in the financial history?
I think Brexit is going to take 3 years because if you see the British Prime Minister, she said there has to be a negotiation. First, British Parliament has to pass it. Then she said the EU can't do anything. The English have to give a notice to the EU. She said, and then for 24 months it has to remain status quo. She said we will give that notice provided Parliament passes and provided we prepare for the negotiation completely. So I think 6 months to 1 year they are still going to decide what they'll negotiate. Then their Parliament will pass. I was in London about a month back. In 2 months back, a lot of people are regretting that they voted for Brexit, right? So the Parliament might not pass it. There is no anti-defection law. People vote as they want. And if the Parliament doesn't pass it, they'll have an election. Even if they give the notice after a year, it will take 2 years. So I personally feel Brexit is going to turn out to be a non-event.
So is that a blessing in disguise for a Tata Motors? Markets panicked on the day Brexit was announced, but ultimately a company like Tata Motors will benefit disproportionately.
I don't know what effect Brexit will have on Tata Motors, but as it is a no, I mean I don't anticipate any effect, and we'll have to see the final law, provisions and they import some large percentage of the components from Europe, right, and they export their cars to Europe. So the Europeans are concerned about selling the components. Then England imports a lot of Mercedes. So then if they put duty on Jaguar cars, this will put duty on German cars. So it's an uncertain situation.
But somewhere secretly, I'm sure you're pleasantly delighted with the numbers which have come out. The domestic business is making money. Margins are at 15.5%, 16% now.
Well, again, you're forcing me to talk about stock. I mean, I'm not giving my opinion, but most analysts have raised the price. And I can tell you, I can't believe that a company which is a Fortune 500 company, right, whose profits are among the largest in India even today, right, can be at 6, 7, 8, 9 P. When the general, Nifty P is 23. By sheer size, by sheer ROEs, by sheer growth, I find it difficult to believe that, his P's will not expand. I'm very much interested. I have a large position in Tata Motors. Please consult your financial advisor before you do anything.
Of course, you told us rather in our last interview that Tata Motors was one of your biggest commitment.
Yeah, it still is.
It still is one of your biggest commitment. You're bearish on oil, but I know you've changed your view on the airline sector. Why is that?
I have not changed my view on the airline sector. I still am an investor in Indigo. My view is that any company who can grow its business without raising equity. On 5 crores, I do 100 crores of turnover. On 5 crores of equity, I do 500 crores of turnover. So Indigo is never going to need money. They're never going to issue equity. They have great cash flows. So I think over a time, I am an interested party. I think Indigo it may not be a good trading bet, but I think it would be a very good investment bet.
Do you think market are underestimating the demand which will now get unleashed because we've not had good monsoon from 2 years? There is OROP, there is pay commission rollout which will happen, and somehow I get a sense that at least when I look at the macro reports, I talk to some of my friends in the industry, they are not anticipating the demand which could get unleashed.
Because they have anticipated that earlier and they have been wrong. It may be a story of the boy who cried wolf. Ultimately, in India, where 1 lakh are born to eat every day, you think demand will not come? Look at the way the airline sector is growing, 25%. So when demand comes, and look at what's happening in paints, what's happening in tiles. So, when I came to the market, the normal growth, less than, Bajaj Auto grew less than 20%. We thought, less than 20%. Now we think, more than 10%. I'm hopeful and I wish and I predict that 20% will come back. It may take some time.
So that
may be the new normal.
Your bullish case, actually, that's an important point. Your bullish case is based on the fact that earnings will come back, and when earnings will come back, they will surprise best of the estimates, and that's how they will surprise.
That's how markets are. What we need is a resurgence of demand.
A year ago we were criticizing the current administration about their pace of reform, but extraordinary measures have taken place in last 1 year, whether it is cleaning up of banks, Discom, GST has seen light of the day. When do you think we will start feeling the effect of that?
Well, We will, as soon as GST is launched, we'll take a year or 2 years to feel the effect. The effect is going to be phenomenal. I think India as a country will save 1 and 1.5%, maybe half of 1% on logistics. The face of Indian manufacturing will change. Mr. Vijay Kelkar, who was one of the pioneers I met him one day. He said, Rakesh, India's GDP will go by 2%. I don't know if it's right or wrong, but there's going to be big gain, right? In discoms, I feel the crux. Of course, there is some gain because of the law, because of the reduction in interest rates. But the most pertinent gain will come when the transmission losses are brought down. And we attempted that many times. We have not succeeded. That doesn't mean we won't succeed this time. But that is the key. See, it took time for the effect to come. It takes time. See, I have learned one thing about India. India has raised its level of growth in every decade since independence. The path of India and its growth trajectory is always upward, right? The pace is its own. The accentuation, what governments can do is they can accentuate to some extent. Because India is too large a country and too large a democracy, right? To change things abruptly. It's a matter, it took 12 years for us to pass GST, but we did it finally.
Finally, that is important.
And when India, like the telecom industry, until 2002-3, I know when I got married, getting a phone, it used to cost, there used to be MTN agents. But once government liberalized the policy, you see the change in telecommunication. So change is slow to come over to India. Once it is phenomenal.
So we can see the change. Now we will feel the change very soon.
We are anticipating it.
Enough and more criticism.
One thing I want to tell you.
Yes, please.
We Indians are frustrated with our rate of growth, right? But we got to realize the direction is sure. It will accentuate with time. And just because we are frustrated, let's not recognize or let us not ignore what we have already achieved.
Enough and more was debated when Raghuram Rajan or Dr. Rajan, he decided to move on. But that made the market nervous for half an hour, 15 minutes, and then markets have not reacted to that.
Because India is greater than personalities. Having said, that was the point I was making. Having said that, I think we always, have to acknowledge the contribution Dr. Rajan has made to this country. I think the NPA problem would not have come down for how many years, I don't know, if he was not there. And I think I personally agree with his stand on monetary policy, right? Because just reduction in interest rates is not going to lead to any unless it is transmitted. So I think his contribution is going to remain, his legacy is going to remain.
And Dr. Patel,
and we must thank him for the good work he has done.
And Dr. Patel is the natural successor for him.
And people are criticizing the government as if they had some eggs to grind with Dr. Rajan, but they've appointed a person who exactly has the same views as Dr. Rajan.
One big change which is happening at the liquidity front is that we are no longer a one-trick pony, which is we are no longer dependent on foreign flows and only foreign flows. Domestic flows have come back. You told me this point 2 years ago, and I've got that quote with me, that you will be the contribution of FI flows to Indian equities will be far less than the contribution which will come from domestic savers, and we could see a tsunami of domestic saving money into equities. We are reaching there.
I think we're not seeing a tsunami.
You think the flows will surprise
Where
us?
In which cocktail party do you see stocks being discussed? Yeah? I have not been well, so I have not gone to any cocktail party lately. But I don't get phones what to buy. I don't hear people talking about markets. So the tsunami is still ahead of us.
There are 2-3 sectors where I would like to, I would like to draw your attention, and one is oil marketing companies. I mean, this is one big reform which already has happened. But if I look at the P multiples and the kind of value or the intrinsic value HPCL, BPCL, and IOC currently are sitting on, I don't think markets are giving them their
it's a story of the boy who cried wolf. I won't like to. I didn't buy them, and I regret it. I don't know at this prices, but they were available at far lower prices. I did buy them. I sold them around 300, 400. So I won't like to comment.
You made a point that India has very low per capita agri yields, and that has to change. And now monsoons have come into place. Companies are also doing their bit. Are you still bullish on that thesis that the agriculture output will pick up and enablers will benefit?
No, but it has gone up. And last year was eye opener. That it may be in the first time when the rainfall was below 90%, but the agricultural production in aggregate did not go down. And also livestock, milk, eggs, they have become such an important, fruits, vegetables, they have become such an important part of the agri production that India is not actually too much dependent on the monsoons now. And agriculture output in India in relation to the world is much, it has to improve. There's no way out. And how are we going to feed 130 crore people?
So bet on the
And I'm aware of that I think not in about 2 years back, one of the biggest exports of India was agriculture, $44 billion. And the value added, I always say, look at the value added, not the quantum, would be 90%.
So as an investor, are you happy that finally Escorts is showing numbers?
Well, anybody, if he's an investor, if the stocks go up, you are always happy. I'm all happy, but the numbers are going to come. I hope they come. They will not come. I hope they come. That's what market is anticipating.
So do you think a company like Escorts is on a path of not just incremental growth, but it could be on a part of an accelerated growth? They are restructuring. I mean, to be very clear.
Why should we talk so too much about companies?
These are all investments. I mean,
I am hopeful you will fare well. Is all I can say.
Globally, what could surprise us? At the beginning of the year, no one thought that the China problem, which is a good old problem, will haunt us so badly. So, what could haunt us?
China is, see, a good investor and a good trader is always alert. Anything could happen, right? I don't think, in my personal opinion, nothing is going to happen in China without social unrest.
Okay.
Because the truth is never going to come out. So unless there is, because China is not dependent on foreign capital, it has $3 trillion of foreign reserves, it has no foreign debt effectively. So nothing in China will come out unless there is social unrest. My personal thing, America will keep growing at 2.5%, 3%. Things are not going to change much. But there are much larger challenges in the Western world. How they will play out, we don't know. And why? Suppose it's not the end here if the Western world doesn't do well, right? That doesn't mean India will not do well. America was not doing well. Japan was growing. Nikkei went from 4,000 to 40,000.
So can we do what Japan did in 80s and China did in the last decade? Can we move independently of global cues?
See, initially there will be problems, but we will outperform the world. That's what I can say. Because we are in, because of the demographics, because so many factors, we can have lot of factors for growth.
I've always judged your market assessment based on your commitment levels. I know you are long and you are fully invested, but when you don't feel excited about the market direction in the near term, you don't have leverage positions. Do you have leverage positions right now?
Why do you want to know what I did?
No, I don't want to know
bullish,
what
that's what I am telling you. I am bullish. I am committed.
Okay.
Right.
No, like in 2015 Jan or Feb,
I came to the market in 1985. There has not been a day from then to today when I have not been leveraged.
Okay.
Only the degree has varied.
Okay.
Because I had no money. The only way I could gain is through leverage. And once you form an habit, you don't get out of it.
No, I'm not trying
so if I don't pay interest, I don't get sleep at night.
Right. No, I'm not trying to put words in your mouth. My intention is not to talk. You are committed right now, and your commitment levels are reasonably high, is what I'm trying to understand from you.
Well, I won't comment on that, but I'm committed.
What is the screen telling you about the short-term direction?
Well, screen is telling us that market is refusing to correct. Even when markets go down, you see in the last half an hour they recover.
But you don't
so
think
however uneasy people feel, they say vadare levanu, gatare vechvanu. So market is refusing to correct. And I also feel market could correct. Because you had a humongous rise. Right? But market is just refusing to correct.
What is your assessment of the IPO market? Historically, classic investors have always used the excitement in the IPO market.
I think there is froth.
Okay.
There is a tremendous froth there.
In the IPO market.
Tremendous froth.
So isn't that a red signal?
Not at all.
I mean, we've seen the big IPOs when they've happened in the past and the froth in the IPO market.
But the hunger for stocks is so high and so tremendous that froth will continue. I said no, that valuation fraud doesn't mean anything. It has to be combined with commitment fraud. There has to be commitment fraud, and then markets have to go down. In 2008, you had the Reliance Power issue.
Yes.
Then only the fraud finished.
Yeah.
So there is a lot of way to go even there, I think.
But when you say that we are in the first leg of a bull market, Mr. Jhunjhunwala, that's a very powerful headline-making statement which is coming from you.
Yeah, I am saying what I feel. I reserve the right to be wrong.
Which means that the blowout phase, the real expansion phase
How
is
can
yet to come.
how can there be a blowout phase without commitment? That's what I'm pointing out.
Okay, fair
There
point.
valuation fraud, you require commitment fraud, then you need bad news.
Okay.
I don't think there could be cases of valuation fraud. There is no commitment fraud, and I hope we won't get bad news.
Certainly. So you don't think, and before I move to some closing, questions about you, I've got some very personal questions for you. The levels which we've saw in Feb 2016, earlier this year, closer to budget, 6,800, 6,900. Do you think something dire has to happen for us to go back there?
I would think so.
So as of now, this market has really bottomed out, both technically speaking and also in terms of.
Well, that's what my opinion is in terms of earnings, and that's what the market is telling us technically. You see the list of new highs to new lows. You see the 52-week highs. You see the breadth, right? You see the talk. Most people who come on television, it's too expensive, you can't. So, that means a commitment. And a lot of people, these opinions come when they're left out.
And typically, the answer is why markets are going up, liquidity. Why markets are going down.
But which principle of mathematics or which professor or which authority in the world says that a 5p is correct and a 20p is not correct?
Fair point.
Right. So, what is fair value? Nobody is a professor or authority to determine what is fair value. And the question I ask myself is not fair or unfair, high or low. I ask, is it going to last? Right? Because we can only predict markets. We can't control them. They are like women, always commanding, always mistress, always uncertain, always volatile, always exciting. And it's like the weather. You may not like it, but you have to bear it. So I think, I'll reserve my opinion on. But I personally feel, seeing the screen, markets are in a very strong position.
Insiders tell me that you've not gone to office for the longest time now. And is that something we need to know?
Yeah, I've been in bed rest for about 6 weeks. I had a wound on my leg, and I ignored it, and it got infected, and the infection went into my bone, and I had to have a very minor surgery. But the surgery requires 6 weeks of bed rest. So 6 weeks I'm having bed rest. Kala din, andheri raat, rekha ke saath, right? So I have nowhere to go. I just can't talk to anybody, can't go out anywhere. But it has done me some good because it made me reflect on life, and I spend a lot of moments with myself, and I spend time with my children and with Rekha. So I think everything has good aspects. So I think although it has made me lose some weight, it's improved my personal habits. So I think it's been good for me.
How soon before you will join the office?
Oh, this week, Friday I'll be in the office.
So just to clear the air, it was just a smaller, minor operation. All those rumors mongering, we should dismiss.
No, it was just small. The operation was very minor. For the recovery, it was in the leg. I need to have 6 weeks of complete bed rest. I can't put any weight on the leg. Right? So now that's coming to an end, and hopefully I'll be in the office again. I missed my office, and
hopefully we'll do a next interview there.
Yeah, sure.
So, we wish you a speedy recovery, but I've got a couple of interesting questions for you. And,
Please.
When we look at the legacy of big investors, Buffett is known for his investment in consumer monopolies. Soros is known for his one trade in pound when he broke the Bank of England. Now, Rakesh Jhunjhunwala has had some big investments, whether it is CRISIL, whether it is Titan, Lupin, Delta Corp now. What do you think is your favorite investment? You want to be remembered when you went against all odds.
You want to ask me whether like RMN more or RMN more? How can I say?
But sometimes you go against the odds and you invest and you take a big bet. So there are certain things which are close to your heart. Investments and kids are separate.
No, my kids are closer. I have no emotions towards stocks. My emotions are for my wife, my children, my girlfriend, my brother, my sister.
You have a girlfriend?
Well, don't ask embarrassing questions, right? So, any stock which makes me money, I'm very emotional.
Okay.
The idea is to make money.
You've never managed public money. You've never had a professional career. So at what time did you decide that you want to be your own boss?
Well, I had an open mind until 2005-06. After that, I decided. See, the question is, it may give me some more money, but it takes away my freedom. It takes away the uniqueness of my relationship with my wife, because she's my only client, right? And, I don't want to be answerable to anybody. I thought it may give me some wealth, but it will take away my freedom. Today, I'm a free bird. I have no customers, no clients. When I say something, I'm not bothered what somebody thinks. If I have customers, clients, I have to think how they will react. And I have nothing to sell. I don't want to come to television because I want to gather money in my mutual fund.
Certainly.
Right? So I have never managed anybody's money except my wife and girlfriend. My wife. I am never going to manage anybody else's money.
So are you a great dad and obedient son, or a real nice husband?
Well, you'll have to ask. I don't know, a great husband, or I'm an obedient son, right? And my mother is closest to me, and I would like to be a better father. As far as a good husband, you should ask Rekha.
Really appreciate your time, Mr. Jhunjhunwala. I wish you a speedy recovery. Thank you for your time, and thank you for quelling all the rumors. They are important because all kind of rumor mongering was floating around.
Yeah.
And thank you for endorsing the fact that we are in the first leg of a bull market.
We are undoubtedly, in my opinion. I reserve the right to be wrong, and I make a disclosure. I'm interested in everything I say, right? I'm prejudiced. Maybe I'm prejudiced. Maybe I'm wrong. So please take advice from your financial advisor before you do.
And that's a big disclosure, but coming from you, I think it's a mark of endorsement. I appreciate your time, and once again, good luck with your first speedy recovery.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.